Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, February 13th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll notice here is that price continues to push to new highs within the uptrending move that we've seen since the beginning of the year, really since the last week of December. It's been higher lows, higher highs each and every time, and we have continued to push toward the opposite edge of the key resistance level that we talked about before, which is 2800. We're now within 49 points of that level at the moment. Overall, this market remains bullish. It continues to suggest more strength ahead, but we are coming into a point where, again, we may see some sort of weakness into the picture once we hit the opposite edge of the range, somewhere between 2800 to 2820. Remember, once we got back above these lows here, 2600 to 2620, it suggested that we were likely headed to that level. That still remains the case. And then once we do, perhaps we could swing all the way back to 2600 and see some defense in here for a while. Again, that would kind of mirror what we've seen here before. But overall, the path still seems like it's up at the moment, even while we could get a bit of a pullback here today. But overall, any pullback still likely to be defended until proven otherwise in this market. So taking a look at the NQ, very similar picture as well. Uptrending market, still poised for the upper edge of the next range. That's somewhere between 7150 and 7200. We've continued to push higher above that 6500, and it's been a very steady up move. Again, the expectation is we go somewhere between 7200, and then perhaps a pullback may occur that could be as deep as 6500. But overall, this market remains bullish, and there's still a steady uptrending behavior to it. If you take a look at crude oil, this one had a little bit of trouble off 54s in the previous session. A good 1.5 to 2 day move up, nice rejection off the 5120s, and a rally right to the previous month's close price, which was clearly rejected in 3 of the last 5 days, here, here, and here. And again, any failure to get above 54s could suggest another swing move down. So after we've seen this thing rally to new highs here, kind of like the ES and the NQ, it failed to get a pullback and go on this move here, and instead rejected at the previous month's close. And then when it retested, it's again showing some signs of rejection. So again, if price cannot get above that blue dotted line, that could suggest that we could be headed back toward 49s for a retest of CVPOC, which again, if that area is tested, is likely to be defended for a return trip and a retest of 55. So again, keep an eye on 5380 to 54s. Any rejection in there today could suggest a swing move lower, especially if 52s are taken out. That's going to be the key level there. If 52s are taken out, things could get very, very bearish very quickly for crude oil. If you take a look lastly here at gold futures, gold is coiling up. It's been tightly compressed over the last week of trading. Anytime it gets that tightly compressed, you typically see an increase of volatility and an increase of price range in the week that comes after. And so again, it could be a breakout in either direction. What we've seen here in recent trading is actually price get very compressed here, as it did, and then try to break down first and then rally. Price get compressed here, as it did, break down first and then rally. Over here we saw the same thing, compression, down first and then rally. And now you're seeing it again, compression. If we break down first, given the uptrend, it could be a trap for another rally. And so again, if we retest 1300 or break down into that zone, 1300 could open a path to 1360. Alright, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.